After a turbulent 2025, the healthcare sector could be on the mend in the new year. Here to discuss is BMO Capital Markets Head of Healthcare Research, Evan Seigerman. Evan, great to see you.
Thank you for having me. Happy New Year.
Happy New Year. It's been a ride. I mean, if you just look at sector-wide, major low in September, massive underperformance by healthcare, by pharma, by the rest of it. And then they kind of rip after some regulatory shadows, maybe recede a little bit. But where does that take us?
For sure. And it has been a wild ride. Go back to Liberation Day when everyone thought pharma tariffs were going to destroy the sector.
Yeah.
That didn't happen. But then you saw all those deals, which I think you're referring to. You saw pharma really kind of leaning into the administration to ensure that they could, really sell their products and open up access. So that's what kind of drove the performance in the back half of the year. And the question that I get is, is there other trades besides the GLP-1s, which we can talk about? Yeah. The Novo pill was approved last week. But also, what happens next year? There seems to be some consternation still at the FDA. That's a bit of a mess.
Sure.
And, the AI trade kind of cools off. Do people put more money into pharma? So our thoughts, obesity is here to stay. We like the deals that we're seeing. We suggested that, that suggests to us that industry and the administration are working well together, but I'd like to see more kind of clarity at the FDA, and hopefully that can also drive performance in the smaller biotech names.
When you say obesity is here to stay, I mean, clearly as a category, it's been dominant in terms of mind share and everything else. Now you see some pricing actions,
for sure,
and obviously some competitive back and forth. What are the smart ways to think and play it?
For sure, and we are positive on Lilly, Nutrol, and Novo, and I think that's very important. While we have the Novo Wegovy pill approved, I don't know if that's going to be enough to get them out of the doldrums. I feel like Lilly has been executing on all cylinders, and they'll continue to do so. But then we're looking to smaller names. I cover a company, Structure Therapeutics. They had some great data recently. Mm-hmm. So I think there's going to be more M&A in the space. There's a scarcity of good assets, which could get some other big players in the space as well.
And so when it comes to, I guess, maybe some of the more traditional legacy names, I know you sort of warmed up to Merck. That stock has actually also had a good comeback. Aside from them being like, wow, they're too cheap, they're kind of unloved, what's the kind of positive forward-looking story?
Great question there. So we did recently upgrade shares of Merck to outperform. And the key there is we're really starting to see them, put together a portfolio of assets to help them get through the looming Keytruda LOE. We all know that's happening. You could see some multiple compression kind of, if they don't solve that, but they have great data from an oral cholesterol drug. They've done some really smart M&A, and they have some really interesting cancer assets beyond Keytruda, which could help grow into the 2030s.
You alluded to M&A. Mm-hmm. What would you expect there, and is it time to just sort of assume that there's going to be a big kind of a mopping up or a consolidation phase?
Well, we've seen a lot of M&A recently. I mean, you had the Pfizer, Metsera, Novo kind of, saga in early November. And I think a lot of these big pharmas have holes in their pipelines that need to be filled. Like Merck still needs to buy, Bristol needs to buy, Novo needs to buy, could go down the list, all the Europeans need to buy. So that really helps because if you have a biotech with good data on the precipice of approval, they are a potential hot target. One of our top picks into next year is ticker IRON Disc Medicine, potential approval next year for one of their assets.